Okay na? What's happening? Yeah. Pero cue ko sa StreamYard chat ha. Yes. Pero sobrang liit na window kasi yung terminal naka-aspect ratio. Gets? Okay. Si Mike, kamusta? Nandun na? Hi, sir. Are you there?
Yeah, good morning, Danny. I can see you.
So good to hear you.
Ay,
Are you from home, sir? I can
yeah.
broadcasting from home. Okay.
Fourth week na ako dito sa bahay. 1 month na, actually.
Sir, we're already live. We're just waiting for the IATF briefing to be finished.
Sure.
So Alay, pag nag-guest ako, ibabalik ko yung earphones. Tama ba? Paano ko maririnig? Oo. Mahimik lang kayo. Medyo mahina lang ah. Sir, can I hear you again?
Okay. Danny, test 1,
Sir,
2,
can you make
3.
it a bit louder po?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
Sorry, wait lang. Naririnig ko siya sa yard.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
Okay, got it.
Good.
So, mag-e-echo, Alay. Yeah. Oo, okay lang. No, I mean, pag naririnig ko si Mike from my laptop in StreamYard, okay lang yon. Okay. Mag-echo yun sa'yo. Laptop. Sir, pa-test again, sir.
Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
Ayan, Alay. Okay lang? Okay, perfect. Thank you, sir.
Good. Loud and clear ka naman, Danny. Loud and clear.
Right. Wala na akong commute sa inyo, ah. Bye-bye.
Okay, thank you.
No, sir. That was for my team, sir.
Yeah. I figured it out also.
Yung commute ko na, sir.
Na-figure out ko rin.
Diba, sir? Like, is there any way you can see me or you just hear me?
I just hear you now. Kanina kita.
Okay. On how? StreamYard.
Kita kanina. Ngayon, Businessworld Live yung nakapost. I think ito na yung broadcast mismo eh.
From?
Naka-standby na yung banner. Businessworld Live, One News. Yung may building na
okay.
Oo. Like, kanina kita na before this.
Oh. Okay, I'm good, guys. One, two, three, sound check. Good morning. You're watching a home broadcast of Businessworld Live. I'm Danny Laurel. One, two, three, sound check. We're still trying our tools, so do bear with us. Trading day just started. We started at 9:30. We're around 1 hour into the trading day. And you're going to be seeing my terminal here on your screens with you. Let's take a quick peek at how we traded. We are, of course, back from Holy Week break, where, if you recall, last week we actually flirted with the bulls on Monday, but nevertheless we ended Wednesday down 2.5%. Weekly we were up by 3%. Right now we are trading just above 55.60. That's 55.63.58. Up by close to 1% this morning. All okay? Can I drink water? I'm going to drink some water. Okay. Babaan daw po konti audio. Ano ibig sabihin? Ako? Volume ko? Okay. Copy. Copy. Sir Mike, we're live in 30 seconds. LIT card after ng intro, tama? Good morning. You guys are watching a home broadcast of Businessworld Live. I'm Danny Laurel. We are, of course, trying out our new tools here and trying to upskill. So do bear with us and try these tools out together with us. Now, the trading day just started. Recall we were on a Holy Week break last week. No trading Thursday and Friday. And as it looks, we are actually, and you'll be seeing on your screens here, my Bloomberg terminal, we are strengthening a touch. We are trading just above 55.60 right now. That's 5562.29. that's up by close to 1%. Now, this, of course, follows how we ended the bourse last April 15. And if you recall, we had flirted with the bulls earlier on last week. But then what happened was that we pared back those gains. We were in the red on Wednesday. That was the last trading day last week, down by 2.5%. But actually, on a weekly basis, last week we were up by 3%. And this was the third straight week of gains that we had seen. We also had better turnovers last week, considering it was, of course, Holy Week. And that was actually rising by 20%, even as net foreign outflows did rise. We saw 18 straight days of net foreign selling continuing. We bled by 1.7 billion pesos last Wednesday. Now, some analysts ahead of the market open today had warned that we might be seeing more profit taking happening. For instance, AAA equities, as Chris Mangon said, that 3 straight weeks of gains might be seeing some profit taking. We could see the index back around 5,000 levels, but he does say not lower than 4,000, which is still a strong support for him. What he is saying is that the market sentiment is very mixed right now. Of course, you've got corporates cutting down their capex plans, but he also does say there's some positive optimism on the government having some time because of this extended lockdown to actually create a plan. And some believe that the government is preparing for that. Another one that is more optimistic on the capital markets are the Securities and Exchanges Commission. They do say, and this from Chairman Emilio Aquino says, that they have already adopted measures to keep the capital markets afloat. And of course, from falling as a free fall. For instance, they did push the operation of trading, even as, of course, it is still right now in shortened trading periods. But they did ensure access to trading during this lockdown period. They've also approved new static thresholds. So, for example, if a stock falls below or reaches a 30% trading level downwards, this actually stops or halts the trading for a short time, and the 50% upward ceiling is still to remain. Another thing that the SEC has done is required public companies, listed companies, to be explaining and divulging how they are going to be continuing their operations and what risks the coronavirus or COVID-19 outbreak has on their operations. So just a quick peek at our sectors here and how we are performing this morning. Everyone actually in the green right now, led by mining and oil, which are seeing gains close to 4%. But take a look at financials. And this has been a standout sector, at least since we opened markets today. That's up by 3%. Properties as well up a touch by 0.5%, holding firms rather flattish. And this comes on the back of a lot of comments coming from our central bank governor, Ben Diokno. Recall last week, we did see inflation coming in slightly higher than analysts had expected at 2.5% for the month of March. But still, this was well within the BSP's target range. And on the back of these comments, Ben Diokno or Governor Diokno did mention that there is more room for rate cuts. He did also say that he's open to off-cycle rate cuts. Recall that the next monetary policy meeting is still on May 21. And now he has mentioned that they are ready to cut below 3% for the benchmark rate. And this 3% is actually already a record low of the Philippines already. He's also saying this on the back of comments that more triple R cuts are even coming. So a lot of positivity right now in the financial space. Now, moving on to property firms here, this has been another sector that's been watched out very closely. We had reported last week that COL Financials, April Lintan, was underweight, let's say, on financials and properties, saying that these are vulnerable to the damage from the coronavirus pandemic. We had also reported, for instance, that Colliers released a report saying that office vacancies in Metro Manila are set to increase significantly. They've even adjusted their projected office stock for 2020 by 20% downward revision. This on the back of saying that a lot of the small businesses will be directly affected here, and that's around 15% of all the Metro Manila office stocks. Nevertheless, properties enjoying some gains this morning. I just want to take a very quick peek at our movers and our leaders and laggards today, but we're going to be checking that back later on. You're going to be seeing Jollibee surging by 7.8%. Jollibee has also been in the news lately. They had reported that there has been a pickup in Singapore and China as the lockdown in China is slowly being lifted, and they're hoping to see that same sort of recovery spill into domestic markets. Pure Gold, a favorite of a lot of analysts in this period because of the fact that they have very staple items in the supermarkets, is up by 4.3%. But I had mentioned the banks, BDO, our biggest lender, strengthening by 4% together with BPI and Security Bank. You've still got a few sitting out this rally rather. Robinson's Retail down by more than 4% together with First Gen, JG Summit, and Meralco all trading in the red this morning. And just a very quick peek on the peso and how the trade figures have affected it, because the trade deficit has continued to widen, but actually was in a narrower pace that we saw at least for the month of February. Recall February is just the beginning of the coronavirus outbreak hitting our country, but already we did see exports rising lower than was expected. So we did see exports rising by 2.8% to just above $5.4 billion, but that was lower than analysts had expected of 3.5%. Imports, however, were the big surprise of the month of February. That was down by 11.6% compared to what analysts had expected, which would actually be an uptick of 1%. Now, this is the biggest drop in imports we've seen since April of 2012. So quite a drop here. And we're going to be asking our economist later on, Mike Ricafort of RCBC, what is driving this drop of imports in particular and how this would hamper our GDP growth projections. So we will be taking a deeper dive into the markets later on. Meanwhile, let's check in on other headlines we are watching this Monday. So more than 1 trillion pesos has been earmarked by the government to save the economy from collapse, but that amount so far covers just 3 of 4 pillars of the COVID-19 response package, including the direct cash handouts, tax breaks, and bond buybacks on the monetary side. Now, the economic team is still debating on how much funds will be allocated for the 4th pillar, which is the economic recovery plan. Now, so far, the total identified funding is at around 1.170 trillion pesos. Now, here is the breakdown. You'll be seeing that on your screens. We have around 830 billion pesos worth of fiscal and monetary action. So this is the tax breaks on the fiscal side and also a liquidity injection on the monetary side. You've got some 300 billion pesos. That's for emergency support to vulnerable sectors. So that's the direct cash handouts by the DOLE and the DSWD. And you've got almost 36 billion pesos to fund medical expenses. So this is mainly the PhilHealth coverage, purchases of PPEs, and medical equipment by the health department. The last pillar is the economic recovery plan, which aims to get the economy to bounce back by creating jobs, but its funding level has yet to be determined so far. Now, while that economic recovery plan is still being hatched up, the World Bank has given the thumbs up on $500 million worth of loans for the Philippines as we battle COVID-19. So that's around 25 billion pesos in debt relief for our country. Now, the multilateral lender says that the loan package could support a unified recovery plan and as well as a multi-year investment plans for infrastructure rehabilitation efforts. It could also be used for the implementation of emergency cash transfer programs. Now, the government is looking to borrow around 280 billion pesos all in all from multilateral lenders to support its economic stimulus package. Well, no surprise here, but business sentiment has slumped in the first quarter. That's following back-to-back impact from the Taal volcano eruption in addition to this COVID-19 pandemic. And the last survey by the central bank showed the business confidence index dropping by more than half to 22.3% in January to March. So this is the lowest reading since the fourth quarter of 2009 amid the global financial crisis. Now, take note that the survey has yet to take into account the impact of the Luzon-wide lockdown, which was implemented just last month. Now, however, the outlook for the second quarter appears to be more upbeat. That's due to an expected uptick in demand, output from the harvest season, and higher infrastructure spending. Well, it's been over 3 weeks since we've had a live guest on our show, so I'm very, very excited to have with us here, from his home and live from his home, Chief Economist of RCBC, Mike Ricafort, to help us take stock of all of these developments that have been going on. Catastrophic developments, Mike, but nevertheless something that we need to understand with your expertise. Now, before we dive into details, Mike, give us just a very good and quick summary, your best summary of what we can now expect.
Okay, good morning, Danny, and happy Easter. So far we have seen gains across the different markets locally as well as globally. We have seen the peso among the best levels in a month, also the best among the best levels in 2 years. Interest rates have gone down to the lowest levels in about a month. The stock market is also already lingered among the highest levels in a month also. So that is true also with the other global markets. We have seen risk appetite already improving. We have
Okay.
seen huge gains in the U.S. stock markets up by 12% week on week. Oil prices remained relatively low. So all of these, and what really triggered all of these is that initially we have seen the unprecedented moves by central banks led by the Fed. They infused again a total of 2.4 trillion in additional cash or credit or loans in the U.S. economy, and that's on top of what they have been doing uh, a few days ago, maybe for the past 2 to 3 weeks. The Fed has already pledged unlimited purchases of bonds, meaning it will never run out of in its arsenal in infusing liquidity or credit in the US economy. So that's open-ended support, so to speak. So that has really driven risk appetite further. That led to the gains that we have seen on Wall Street, as well as for the rest of the world, including emerging markets. We have seen also the measure for volatility improving to
Mhm.
the best levels in nearly 1.5 months or since early March. And this is on top of the cuts in interest rates, the sharp cuts. It's already at record low levels for most countries, close to zero, if not zero for some developed countries, and even negative. And they have resorted to quantitative easing, the one that I've been mentioning, the unlimited bond purchases led by the Fed, and also similar moves in other developed countries like in Europe, and some equity infusions also in Japan and in the rest of the world. So that's all learning from the lessons of the previous crisis periods, because
Okay.
this is all to support the stimulus measures, all record stimulus measures. In the US, it's more than 2 trillion, and there's still more in the pipeline. That's a record high. So we need both monetary policy that's supportive in further lowering borrowing costs and infusing more cash, more credit, or loans into the system, as well as fiscal stimulus that would provide money to especially those the most vulnerable sectors, because uh, this is primarily a health issue. Rather, it's not
Okay.
economic, it's not
Okay.
financial. This is something that's well, deliberately done by practically almost all of the major countries around the world. Just these stringent measures, the lockdowns, the social distancing, the stay from home orders or work from home orders, just to make sure that the coronavirus will not spread, or at the very least, it would better the coronavirus would be better contained or controlled. But so far, it's still, hopefully we would, well, everybody else is still looking for the vaccine or the cure to
Okay.
somewhat make this sustainable. So it's a risk on mode again. This is already the recovery, the upward recovery in the global financial markets,
Sir,
led by the US as well as here in the Philippines.
Sir, let's dig deeper into the fiscal plan of the government. You mentioned that there needs to be a coordinated effort. You've seen positive response on the U.S. Fed's plans, for instance. What's your response here on the new the package? So it's 1 trillion, more than 1 trillion pesos stimulus. That's already going to double our fiscal deficit. And this is way beyond what the ceiling that they were giving, which was 3.2%. Won't there be any danger down the road? I mean, can our economy afford this? Secretary Dominguez of the Finance Department saying that there might be a possibility that taxes might increase pa, and we will be having more aid, especially foreign aid. How will this affect our economy in the long term?
Well, this is a balancing act, so to speak. There's the need, the immediate need to provide financial aid, financial assistance uh, to the most vulnerable sectors in the economy in view of the lockdown, because the lockdown has, we have seen people out of work.
Mhm.
They have lost income. They have lost, some of them lost jobs. Some of them lost livelihood, both in the formal as well as in the informal sectors. So uh, that's why the government has already come up with stimulus measures. The assistance that we've seen more than a week ago, the 5,000 pesos to 8,000 pesos for the next 2 months per household, for a total of 18 million households. So that would help them weather and to help them tied up, especially during the lockdown periods. And also some proposed assistance on small and medium enterprises, or even the MSMEs, rather, the micro, small, and medium enterprises. Uh,
Mhm.
well, this is, the amount is kind of, at least it's relatively huge, because that's computing it, that's about 5 to 6% of GDP.
Okay.
And if you compute the losses for every month of lockdown, the loss, those, especially the most adversely affected sectors, the businesses that shut down or ceased operations
Mhm.
completely. So you're talking about, for every month, that's 8% lost sales, lost production, lost income. Now, the lockdown has been extended for 2 weeks. It's already a total of 1.5 months. So we're
Mhm.
talking about, for the hardest hit industries, businesses, that's already 12% of their sales, of their production, already far gone on an annualized basis. But we have to note that Luzon accounts for 70% of the Philippine economy. And you have to offset also the fact that there's still some essential industries that continue to operate. So,
Sir, you mentioned, excuse me, sir. Sir, just to interrupt you, excuse me for that, but you did mention you're hoping for a recovery, and this amount is needed for that recovery. What's still the likelihood that a recession could happen or a negative growth?
actually, that is still very much, well, the decline in economic growth, as I mentioned a while ago, that's very much possible, because you're taking away already, uh, you're taking away, for the most affected businesses and industries, the 1.5 months, you already take away 12% of their total production, total output. So that would be reduced outright from economic growth. But of course, that's offset by not everybody's closed. So some essential industries and businesses remain to be open, as well
Okay.
as the stimulus measures that would also help offset any economic fallout or economic losses, and that's kind of huge.
Mm.
We have been running the numbers. At least the preliminary numbers would show that GDP growth could be the baseline original. The target is around at about 6%. So that's already
Okay.
erased. That's already
Yeah.
erased in view of this lockdown. And
Okay.
and at least the stimulus package and the COVID programs of the government is equivalent to about 5 to 6% of GDP. So at least
Okay.
mathematically, that would cover it.
Okay.
That would significantly cover it in a large way. So that's why it's mathematically possible to
For
see
growth.
zero growth or slight negative. So it's and of course we have to note also the others on top of the stimulus measures, the other fiscal interventions, fiscal policy interventions, as well as monetary policy interventions that would hopefully help mitigate the risks of recession. Of course, everybody else in the world is doing this. The US, in Europe, Japan.
Mhm.
Yes,
Sir,
Danny.
on the monetary policy, let's close with that. I mean, BSP is doing everything it has in its arsenal, basically lending to the government, cutting triple R for small banks, even benchmark ratio below a record low already of 3%. But some analysts, I've been talking to some economists saying that even if you have all this liquidity, sir, circulating in the market with, Moody's, Fitch, a lot of downgrades on the banking sector outlook, won't the banks be, let's say, scared to, or have this risk off sentiment to be giving out loans, and won't the corporates take their time before starting to tap into these loans? How long is this going to help propel the economy, especially if it acts with a lag?
Actually, it depends on how deep the packets are of the conglomerates and the corporates. Those with deep packets, because the opportunities are presenting themselves in terms of sharp reduction in credit costs. Because you have the sharp reduction in policy rates, and that below 3%, it's very much possible. Currently, it's 3.25, even if they cut it at 2.75, that is still decent enough to hurdle inflation at a little over 2%. So, meaning it would still maintain a positive interest rate return and at least prevent a scenario of negative interest rate return. So, that is still very much possible. And this once in a lifetime
Okay.
pandemic would really call for the appropriateness, the exigencies. The best time to use these monetary policy tools. There's no better time than now.
Mm-hmm.
So it's better to really, well, it's consistent with what has been signaled by the monetary authorities here locally as well as globally, that they could still cut policy rates, and they could still do liquidity infusions, infuse more credit, and that would and some corporates, especially with deep packets, would be more than happy to lock in lower borrowing costs, and that's really the
Okay.
objective of this monetary policy measures, to encourage further and spur greater economic growth through lower borrowing costs, prompting more businesses as well as consumers to borrow. It would uh, add to economic activity, create more jobs, and
Okay.
have more multiplier effects on the economy. Especially, well, even for businesses, they create jobs. For
Mm-hmm.
consumers, when they take out mortgages, like the multiplier effect of real estate is huge. It affects so many other industries in a positive way. So that's really by design by the global monetary authorities, learning from the past crisis periods. That's one way to avert the risk of recession on top of the fiscal stimulus measures. So
Okay. So,
hopefully,
yes, sir. Go.
so hopefully they'll try to do a better job now, given this
Okay.
unprecedented and record levels of interventions, both monetary policy, the infusion of liquidity and funds, as well as fiscal policy, the provision of large and record amounts of fiscal stimulus to their respective economies worldwide. So hopefully this would help mitigate the
Mm-hmm.
risks of recession in the coming months. But realistically, well, the lockdowns would really have an outright reduction on economic growth, especially in the second quarter. So let's see if this
Okay.
is contained right away, uh,
Mhm.
and slowly there's normalization in business and economic activity. So we would see some gradual pickup again in economic growth. and some normalization in towards next year.
Okay, thank you so much for those insights. That was RCBC's Chief Economist Mike Ricafort saying that now is the time to go all out on the fiscal and monetary double barrel stimulus. And that was a first look into the business day. Today is Monday, April 13, 2020. Thank you so much for watching. Do join us again tomorrow, 10:30 a.m. I'm Danny Laurel, and we are One News. Shit, guys. Kamusta? Sir, can you hear me?